reinforcing inappropriate behaviors. Those inappropriate behaviors, namely, are not predefining your risk is the biggest one. You get into a trade, you don't predefine your risk, and you win. You're going to do it again. You're going to do it again until you get hit with it with a huge loss. And sometimes those are really hard to recover from. And in fact, for most people, they're almost impossible. Not that you can't, it's just that they just don't have the resources for it, nor do they have the desire or the inclination to do it. They just walk away. Are you relatively clear about why you would want to do this? Why you'd want to go from a trade by trade to a series of trades perspective? Sincerity. See, you need the desire, you need the clarity, and you need the sincerity. It can't be lip service. It has to be real. It has to be authentic. As a matter of fact, I'm going to say to you that based on my experience, if you're clear, if the desire is there, it's genuine, the clarity of your purpose is there, it's unconflicted, and so the sincerity is there, it will virtually happen automatically. That is the technique for change. What most people, the problem is that with most people, it takes usually a series. Let's say it takes using various techniques that are available, that have been created and thought up, that over a period of years, they finally get to the point where they have the real desire, they have the clarity, and the real sincerity is there. And once all those are in place, the change happens automatically. And they would think that it happened over a period of years using techniques. But the reality is it just clicked into that, just finally the whole thing clicked into that one point where it's all there, like the straw that broke the camel's back. I mean, a good example would be about what I'm talking about in terms of how clear you have to be in some cases, because some of the energy that you want to move out in terms of a conflicting or dysfunctional belief, it could be really strong energy. I mean, it could be pretty substantial. When you think about it, I mean, there are traders that I worked with many years ago, especially, that were really, hardcore technicians. I mean, these are really hardcore guys that just, I'm not even going to mention the techniques they use, but, it's like, well, I'll get like Elliott wave casualties. I mean, there were guys that were just, there was a time in the late 80s and early 90s where a lot of my off-the-floor traders were what I call Elliott wave casualties. And, and because these are guys who just, who love to analyze. And, when they start understanding the difference between analysis and execution, and also the underlying dynamics of the market, it's like they had to get to a point where the realization that they'd spent 10 years or 8 years and thousands or tens of thousands of dollars on analysis and workshops and seminars, when none of it was, or very little of it was really necessary. I mean, they had to reconcile all that stuff, and that wasn't an easy thing to do. That wasn't an easy thing to let go of. It wasn't an easy thing to say, okay, it was all right. I know what I need to know now, and, But how do you know what real clarity of intent is? Imagine yourself being held underwater. Imagine yourself being held underwater. And as your air starts to run out, second by second, it gets to the point where you believe that if you don't get a breath of air right now, you're going to drown. That is a point at which every fiber of your mental being is aligned 100% with your desire. for that next breath of air. There's no conflict. There's no hesitation. There isn't anything that argues inside of you for anything else other than that next breath of air. If you want to make money bad enough, in other words, if you want to be able to make the kind of income that you can rely on as a trader, then your desire to switch to this series of trades approach has to be greater than any resistance that you might have to stay in a trade-by-trade approach. Does this make sense?
Good morning, guys. Dakota back with another live stream. Today is April, what did I just say? I meant August 13th, Friday, 2021. Alright, so first going to dig into the charts. If there are any questions or any pairs you guys want to go over, please go ahead and type it out in the live chat. Alright, let's get into it. So starting with EUR/JPY, still have the sell being held, still holding the sell, and until that trend line's broken, still holding the sell. All right, there's no confirmation for me to exit this position just yet. Obviously, we have some price is rejecting this level at the moment. You need to see price break that level, so that we can move our stops, at least our second stop, and at break even. And after that, just looking for price to continue to scale down and potentially break this level next. All right, let's go to AUD/USD. AUD/USD, pretty much the same thing. Price barely broke the pattern. Would love to see like this break be a lot more aggressive in this situation. So, but we still don't have any reversal pattern just yet telling me, hey, start looking for buys. So there's no reason to change anything just yet. And yeah, just continue to wait. If trend line breaks, gonna close position. If price continues to push down, taking partials here and moving my stops into profit. Let's go to pound dollar. Pound dollar, okay. So close the position a few days ago here. It was a sell from this point. Now price had the potential to come all the way down here. Now after price made this rejection here, you can see it came back down to the zone, obviously. And we're looking for price to either close below the zone and keep on pushing. And if that happens, we'll just look for a setup on the 1 hour time frame, catch a continuation, or price to continue pushing up. Now, I really like this corrective movement to the downside, at least for a buying opportunity in this situation. But obviously, it could continue to extend and just have an extended downtrend in here. But something that I would love to see is this level be broken. Price close below this level. Then we get a correction for that sell. That's something I would be extremely confident in taking the sell in the continuation for that. As far as the buy goes, I still don't like the buy in the situation. It doesn't have too much upside potential for me, from my point of view. And I do like that price has previously broken this low here. Something else that I might like to see is, let me go ahead and delete this. Instead of price just continuing this downtrend, could come back up to the zone and give another selling opportunity and just keep on rejecting the zone maybe a few more times and give us a nice little sell there. Yeah, I would actually really like to see that. But to wrap it up real quick on GU, to keep it short, just in case, like to get rid of all the hypothesis, if price breaks above, correction, look for buy. If price breaks below this zone, or breaks below that level, wait for a correction and then sell below. Simple setup. All right, gold. Okay, gold, we got that buy position, and it was in profit at the moment. Obviously, at this point, if you're managing these positions, please, I hope you have management rules, okay? Protect your position in these situations, because especially with volatile pairs like gold, US30, you want to have some type of management plan. In my opinion, I strongly recommend it, because they can turn around really quickly on you. All right, but I'm still looking for this to continue to scale up, even though it's slowing down here at this area. Price has broken above this high, and I'd like to see it push up aggressively. So generally, what I like to see, if price correctively breaks a high, that it will continue to correctly break it, but eventually it will just give a super large, let's say a strong momentum candle after that break of the high here. And when I say break of the high, I mean a close above the wicks, which in this situation has happened. So that's what I'd like to see. I'll go ahead and send this out as an update. There's no updates on the other pairs, so that's why I haven't been sending anything out. It's pretty much been, it's been very empty in the chat because I haven't sent any charts out recently. That's because there's nothing to send out. It's prices in the same spot. It's the same exact analysis from last week. Also, whoa. Also, I'd like to keep my markup from the weekend. So I'll be going to different brokers if I do change or do a full markup. Okay, that's gold. So yeah, like I said, waiting for strong momentum candle to come, and then looking for a correction after that for another potential opportunity to enter. Whoa. All right, let's go to US30. Okay. That was fast. So yesterday, it looks like I talked about an ascending channel forming in this situation, looking for price to come down to form a correction. Now, the ascending channel, if we count this break to the downside, was cut short. Price broke out pretty aggressively, went to the 50 Fibonacci level, and scaled back up to make new highs in the situation. Something that would be pretty interesting, but honestly, I can't recall many times where I've actually seen this pattern form on US30. It would be interesting to see an expanding triangle. But there's some things that we can do here. There are some setups available here. We'll have to play out in different scenarios. Yeah, they're both in about the same area, so I'm going to take the 1 hour. So a possible buying opportunity here as price scale. If price scales down to this point, you can look for a short-term buy just straight to this high here, or whatever high is made, or this level here. And if price gets down to this level, I would love to see a wick down further than this low to form the expanding triangle that I was talking about. But like I said, not too confident in that pattern actually forming, just because I don't recall too many times where I've actually seen the pattern form on this in this market. But that's about it. That means there are no questions, right? No questions, no bears. That's great. So that means I can start early on the more backtesting review. Man, forgive me. I keep yawning. Okay, how long are we gonna go? 20. We'll go to 8:30. All right. So I'm gonna go ahead and set it up and let's start. Alexa,
would you consider it? I mean, if you would you look at each trade, and if you executed it flawlessly, and you say you generated money, and then you went to real money, how would you decide? I guess if you lost money, to answer my own question here, in other words, what would you expect the transition to be?
Well, that's going to depend on the individual. One, you're always going to want a paper trade. If you've got a new set of variables that you're working with, you're always going to want to paper trade it to the point where you're confident that you can get good results. That doesn't mean that you can execute good results. It means that the potential is there. You want to know the potential is there, correct? Once you know that the potential is there, then you move. See, the paper trading part is only to find out what variables in the market work in relationship to, like market movement in relationship to the formula, okay? Now we're working on our brain, okay? That's the first step. The second step is that do I think in a way that's consistent that I can extract the maximum potential out of the methodology? That means executing flawlessly. So what you do is you set this exercise up in a way that what'll dictate it is how much you're comfortable with how much you're comfortable with the dollar amount of losing every single trade. That's how you know how to set it up. That's really key. It really is. It means that if you have to trade one share, then if that's all you're comfortable with losing, based on the dollar value of how much you have to risk on each trade. That's based on your analysis, by the way. Then do it. And then when you can execute one share flawlessly over a sample size or one or two sample sizes, then go to 10 shares and see how you do. And if you can't do 10 shares comfortably and flawlessly, go back to 5. You're just building skills. If you get your mind out of the money, out of the outcome part, and focus on building the skills, once those skills are there, you're going to make all the money you want. That makes sense, doesn't it? Do this exercise and you won't believe how things will change until you actually change, and it'll be amazing. Do the exercise. So does anybody else have any questions about how to set this exercise up? How long are you going to do the exercise? If you set it up and do it, how long are you going to do it? What's the criteria?
20 trades.
I understand. How many 20 trade sample size or 25 trade sample size exercises are you going to do?
Until there's no conflicting enemies.
That's right. Until there's no conflicting and competing thoughts. Until you can do it flawlessly. Until you can do it. Until it's like just a part of who you are. It wouldn't occur to you not to do anything other than what your rules say. It just wouldn't even occur to you. It doesn't even enter your brain. And I guarantee you, at that point, you will be thinking in probabilities. You will be trading without fear. You will be trading from a carefree state of mind. That's the payoff. You'll be thinking like a pro. So you want to resolve to focus your efforts on developing specific trading skills, and consistent profits will naturally flow as a byproduct of the mastery of these skills. The most successful traders love the process of trading, whereas a typical trader usually ignores the process because he's obsessively focused on the outcome.
On these trades, you keep saying, do the process, and you do it perfectly, right? What are some of the pitfalls? I mean, when I trade, I don't really think that I'm doing too much wrong. So I'm curious what all can go wrong on a trade other than typing it in wrong.
All the things like all the errors that I mentioned earlier, like not predefining errors. If you're not doing stuff wrong, that's fine. That's don't add stuff. Yeah, don't make it. Yeah, don't. If you're doing all right, then you're doing fine. Okay. I don't want to give you the impression that there has to be anything more there. It's, Okay, resolve to commit the 5 fundamental truths about the nature of trading as core beliefs of your trading personality. Those 5 fundamental truths are anything can happen. Is that true or not?
Yes.
Every moment is unique. Is that true?
Yes.
Okay. An edge is nothing more than an indication of a higher probability of one thing happening over another. Okay. Is there a random distribution between wins and losses on any given set of variables that define an edge? Yes, absolutely. Do we need to know what's going to happen next to produce a consistent income? No. You see, so if you find yourself, as you're doing this exercise, with conflicting and competing thoughts, pay attention to what you're thinking. Pay attention to what you're about to do as a result of what you're thinking, and then refocus on what you want to believe. I want to believe that anything can happen, that there's a random distribution that I don't need to know, and just stay focused on these particular beliefs and do the best you can and keep on doing it until it just becomes a part of who you are.
Sounds like a meditation.
It's right. You're absolutely right. It's like a meditation. That's right, your mantra. Put them up on your wall or by your computer screen. Because they're all true. Resolve to continually reinforce a belief in your ability to be a consistently successful trader by adopting the trader's creed. By the way, these two things are in trading in the zone. The 5 fundamental truths and the trader's creed are both in trading in the zone. The trader's creed, I am a consistent winner. In other words, remember the belief that I put up that I am a runner? Remember that? I said when I actually became a runner, that belief compelled me to express myself in a way that was consistent with that belief? Well, what we want to do is install a belief that says, I am a consistent winner. And the subset beliefs that you have to make this true will automatically compel you to act or behave in a way that's consistent with that belief. Why are you a consistent winner? Because I objectively identify my edges. Objectively, meaning no rationalizations, justifications, or building cases. I know what criteria defines my edge, and it's either present or it's not. I predefine the risk of every trade. Wouldn't even think about getting into a trade without doing that. Now, that doesn't mean, because who brought that up earlier? No, he's not here right now. That doesn't mean that I always put a stop in the market. But I trade subjectively. That doesn't mean I actually enter a stop. But I guarantee you that whatever price I picked as my risk point, I never violate not getting out at that price. The market hits my price, I get out. That doesn't mean I've entered a stop in the market beforehand. But I could do that. I don't have a problem with that. It wouldn't even occur to me not to do otherwise. I'm a consistent winner because I completely accept the risk, or I'm willing to scale back or let go of the edge. Meaning I'm completely free of conflict about the amount of money I'm willing to spend to find out if this trade is going to work. If you're not completely sure, or let's say completely without conflict about the amount of money that it could take to find out if this trade is going to work, then scale back to a level that you're comfortable. But the important thing is participate. Even if you have to scale back again to, like I said, 1 share, at least you're participating at a level where you've got some money at risk. I act on my edges without reservation or hesitation. I am a consistent winner because I act on my edges without reservation or hesitation. I'm a consistent winner because I continually monitor my susceptibility to making trading errors. And how do I do that? I keep journals. I pay myself as the market makes money available to me. I subscribe to a philosophy of scaling out of positions. I like to divide my position up into fractions and scale out in quarters or thirds. That way I'm continually making myself a winner. As the market makes money available, I'm extracting money out of the market because I don't know how far the market's going to go in my favor. And what I have is I usually have at least a quarter or a third on in case it just does something that, you know, I could have never anticipated. And by the time I've got just the last third on or last quarter on anyway, and you know, I've got a trailing stop, or you know, at least a place in my mind where I get out if it retraces back to my, you know, not far beyond my entry point anyway. That from that point on. And the last one, I never violate these principles of success. Well, what do you think, guys? Any questions? Get them now. Go ahead.
Lynn?
No, I know a lot of traders who do. I just don't. That's it. I'm not saying that just because I don't doesn't mean that I don't think it's fine. I just don't have a particular methodology where I scale in. That's all. I get in all at once. Anything else? Here's your chance to get on the DVD. Come on. Don't miss out. What's that?
Never violate and walk.
Well, no. Why? What do you mean? That you think? Well, what do you? Yeah, you don't have to. You can get to a. Go ahead.
Never violate. The never is that. They said never say never.
Well, you know, let's put it this way: you can at least aspire to never violate the principle. Yeah, that's good, but that's a good point. Yeah, you're making a good point. You really are. I appreciate that. You can aspire to never violate these principles of success. Anything else? Let's call it a day then. Call it a day.
GDP today. Okay, so welcome everyone. Thank you for attending this webinar. This webinar is aimed particularly at those that are either new to this game or those that, whilst might not be quite new, have found that they aren't really getting anywhere. Obviously, I haven't got any experience battling hordes of zombies, even in PC games, but I do have a huge amount of experience trading. I've done it for 14 years, with at least 3 of those in a prop trading environment. So let's enter the realm of the trading game. Firstly, be under no illusions. You are on your own, and no one is coming to save you. As I'm sure a lot of you are well aware, this is not your normal job. Have you ever tried explaining what you do as a trader to a child? Because I've tried. You start off by saying, you know, you buy and sell. And the child usually says, well, what do you buy? And it snowballs from there, and it suddenly gets very complicated. Because essentially, when you break it down, you're buying something that you never receive from someone you don't know, using money you don't have up front, and then you look at a chart to work out what it did in the past to gauge whether it's a good time to pass it on to someone in the future. And if you're a day trader, like I am, you might spend upwards of 10 hours a day in front of a computer. And all the while, you're telling yourself proudly that, you know, you're your own boss. But meanwhile, the market begs to differ, because the market tells you when to trade, and then after an indeterminate amount of time, it decides whether to pay you. To compound the whole kind of arbitrary nature of this trading game, you can make a great trade and lose money, and equally you can make a horrendous trade and get rewarded by sheer luck, all of which slows the whole learning process down. But it does get even more bizarre than that, because actually when you look at the business of trading and you break it down and you look at what you're doing on a day-to-day basis, it's a business where being emotionless, which incidentally is a trait associated with psychopaths, is a badge of honor. It's like we strive for that. We strive to be emotionless robots. It's a business which your friends, your family, and your loved ones rarely understand. And it's a business where if you're lucky enough to learn the rules, either the rules change or the other players do. How many times have you seen videos where people tell you, look at what the big guys are doing? You know, you spend hours being taught, this is how to spot what the big guys are doing so you can profit from them, all with the intention of turning you into a big guy so everyone can spot what you're doing and profit from it. It's a business in which you'll regularly experience pain, frustration, worry, and stress, and where virtually every step you make will end in some form of regret. Okay, whether it's that you should have held a trade for longer, you should have got out sooner, you shouldn't have risked as much, and a multitude of other sins. But when you look at the emotional toll that you take as a trader and you're thinking it doesn't sound that healthy, you're completely right. And finally, it's a business in which the market does not care whether you thrive or whether you fall by the wayside, whether you live or die. The market doesn't care about you, okay? It was here long before we all came along, and it's going to be here long after we're gone. I always get the traders I work with, and I always try and tell newer traders to think of themselves as liquidity providers, because that is essentially what you are. Nothing more, nothing less. Calling yourself a liquidity provider is a really impersonal term, but it mimics the way the market works because it is impersonal. Your role is to help others facilitate the trades they want to take. And actually, if you think about that, then it might help you a lot, because whenever you buy, someone is offering that market out to you. And when you think it's time to sell and you look to go short, someone is basically lifting your offer and buying. What are their incentives for doing so? Anyone that's been around this game for a while is going to know that when you're playing it, you're not on a level playing field. And there's many reasons for that. And I'll go over a few of them. There's traders out there that have way more power than us to push markets. They might be traders that work at institutions, they might even be central banks, but they can push the market around. There are traders out there that have access to inside information that's not readily available to others. There are traders out there that have the ability to act faster than us. And we know about that with all the, the controversy surrounding high-frequency trading. And there are a lot of traders out there that have access to way lower costs of trading than we do. So when you put just those four things together, in short, we all pay more money from a smaller pot, we're less informed and slower to act than the competition. I mean, you really have your fucking work cut out for you in this game. And the buck really stops with one simple fact. You are gambling for a living. And I know newer traders don't like to hear that, and I always tell them it, because high probability is still just probability. And what you are doing is you are building a career on the value of your best guess. And you should never, ever forget that. Now, if you're still here after that, let's do away with some often regurgitated bullshit at the outset. If you're one of those people that's been trading for years and not getting anywhere and thinking to yourself, if I persevere, I'll get there, then you might want to think again, because I always see people saying you just need to persevere. But having perseverance is not enough. I've seen many traders that persevered and never made it. If someone does the same thing every day, expecting a different result, what are they? Apart from a fucking idiot. Well, they're also someone that's persevering, but it doesn't get them any closer to where they want to be. You can only get better in this game by one way and one way only, and that is self-analysis. What am I doing well? What am I doing badly? What are my major weaknesses? And what are the specific steps I can take to become a better trader? These are the things that you constantly have to be asking yourself. Perseverance is all good, but you have to persevere in a way that is conducive to you improving as a trader, not just simply doing the same thing all the time, which is what so many people do. The second point I wanted to make here, and I appreciate this is very, very controversial, but this is the law of attraction. Think about money, it will attract money into your life. That's bullshit. I mean, seriously, that is bullshit. People saying that if they tell themselves they're rich, they'll get rich. I used to work with traders that above their screens, they used to have pictures of Lamborghinis and a villa in Marbella, and 2 years later, they ended up with a flat in Peckham and £30 on their Oyster card. I mean, I don't know if anyone here follows that stuff, but if you do, you know, I'm fairly sure that all you're going to be attracting is a bloody disappointment. You know, the money in this game tends to gravitate towards those that don't care for it. Those that are trying to attract loads of money into their life don't tend to get anywhere. And I have found this to be one of the very few prevailing truths, which is why so many people make money on demo and not when they go live, because they don't give a fuck, because there's no money involved. It's the attachment to money that causes so many traders to lose. Okay, so presuming that the little reality check of the first two slides hasn't got you slitting your wrists, let's actually take a look at this market. The market's constantly moving about, trying to auction for buyers and sellers. And what happens is that price and time come together to create this excitement. Let's just think about that concept for a second of price and time and adverts. This market is like one long TV advertisement. It's like the selling channels, right? So these channels on TV that sell you shit all day long. And if you actually look at the way they work, they use the concept of a fixed price. So they might start out by saying this diamond that I'm selling here is worth £500. And then what happens is the price rapidly auctions to a new area, which becomes the bargain price. So it's worth 500, but hold on a minute, we've rapidly brought this down to just $25.99. And at that point, the clock starts ticking, and you get the whole time is running out spiel, and everybody's buying congratulations to Jenny from Manchester and Kate from fucking Birmingham. And, you know, 1 minute you're sitting in front of the TV with a beer on a Saturday night, and the next minute, you know, you've just bought some absolute toot off a selling channel. And if you fall in the trap of chasing the market, you're going to end up in the same boat as the people that buy everything that has a decent advert or a decent person selling it. You need to know what you're looking for. Now, it shouldn't come as any surprise to anyone that follows my stuff that I find that the biggest traps in the market tend to occur at swing points. So if we have a look at Friday's trade in the euro dollar, we'll see that we had a key swing low at this area here on the charts at 124.99, just beneath the 125 handle. And you'll see that the market comes down to this area, it breaks it, it closes above, we get my swing failure pattern. And, you know, there's not a momentous rally, but that's certainly the low at that point as people get caught underneath that prior swing low. If we move over and we have a look at the Aussie dollar, there's an example of that here. So you'll see a deep swing low, the market moves away from it, it comes back to it, probes the liquidity pool beneath this low, then closes above, and you can see that that's the bottom. You need to get used to looking at these areas ahead of time, but the whole concept is not really black and white. When you're looking for swing failures, you don't want to think, all right, okay, I'm going to get in because it just broke a swing high and closed below, or it broke a swing low and closed above. You really want to look at the structure that the market makes. A lot of traders that don't make it in this game, they take a pattern and they break it down to its lowest common denominator. You know, a swing failure is a break below, close above, so I'll trade every single one I see, and then they're, you know, bitching and moaning that the thing doesn't work very well. Of course it doesn't work very well if you trade it every single time you see it. So you've got to look at the structure. To give you an example of structure, we'll turn our attention to cable on the hourly chart. And I sent out a tweet about this last week. And I sent out a tweet that said, heads up on cable. it's going to trigger a daily.
Hey, bro, I don't mind looking at US30, but don't just demand me to look at US30, bro. Say, can you look at US30, please? All right. I actually think I looked at US30 earlier. All right. I'll bring that closer. Okay, so let's first see what's going on with the charts. So on gold, we got a little bullish action right there on the lower time frame. If you're that type of person to be on those lower time frames, again, looking for something aggressive to happen. All right, something very aggressive to the upside. I'll say it one more time. Clip this. I'm looking for something very aggressive to the upside. If I'm wrong, I'm wrong. When we lose the trade, or I lose the trade, right? Whatever. But I'm looking for something very aggressive to the upside. It's the last time I'm going to say it. USDJPY is pushing up. Hasn't broken anything just yet. USD is still messing around in that area. All right, let's go to US30. Or yeah, US30. There's nothing to do on GU. Yeah, we just looked at US30. I'd like to see a retracement to one of these levels and then look for a buying opportunity. That's pretty much it. Which means there's a possible sell on a lower time frame. But it's hard to say that because these are new highs. So it's not really, in my opinion, it's not smart to sell. Or at least with my strategy, it's not smart to sell in this situation because there is no prior resistance. There's no prior supply. So you just have to continue to wait. I feel like I did this or went over this some months ago. No, it was forever ago. Okay. Then it must have been nice. I know I went over one of those. Because those are things that are actually on my list. Ah, that hurts. Okay. Could have been a bit more precise with the zone. Yeah, this was a while ago. And I think we broke this down all the way. Yeah, we did. Okay. Yeah, so nothing to do here. Now, this is going to be something that's going to be regularly on my list next year along with US30. I'm actually going to dwindle the Forex pairs down as well. I'm just going to stick with the pairs that have the best results over the past 2 years. All right, well, appreciate you guys hopping on the call. Hope you enjoyed watching me work. And like always, if you guys do want to join the Discord server, the link to the to join is in the description. Also, if you want to show some support, there's links down there where you can show support. You can follow my blog, check out Instagram, give me a follow there. But most importantly, please go ahead, leave a like button here, and go ahead, hit subscribe to keep up with future content. And I will catch you guys later.
Daily trend change to bullish. See on the charts. Now, what did I get back when I sent out that tweet? I got a load of tweets telling me where it's going to go to the upside when it breaks that area. Admittedly, it didn't form a swing failure, but why was I even looking at that area? I was looking at that area because it's a beautiful area in terms of the structure for a stitch up. If you have a look at the daily chart of cable, you will see that there was a potential trend reversal coming in at that point. Which is why I was looking at it in the first place. So you can see that the market has made a low here and a high up this point here, and then a lower low, lower high, lower low, lower high here. The market turns down, and at this point it makes a higher low, and when that happens and as it starts to move up from there, traders have got an indication that there might be a higher low. We don't know yet because it's, you know, we only know that with the benefit of hindsight after it's rallied away from there, but they will be looking at this area here, the last swing high, to see if we get a change in the structure.